You are the audit manager of Gabriel and Musa Associates, a firm of certified public accountants responsible for the audit of Sephora Limited. The draft financial statements reported a profit of 13 million for the year ended 31st December 2023. The audit for the year ended is almost complete, and the following matters have been raised by the audit senior for your attention. 1. On 2nd November 2023, a major customer went into receivership. The balance owing from the customer was 2.8 million as at 31st December 2023. This amount has been included in the accounts receivable figure in the year-end financial statements. Number 2, a former employee sued Sephora Limited for unfair dismissal during the month of December 2023. The company's lawyers estimate that damages amounting to 65,000 shillings are probably payable. A note has been included under the notes to the accounts describing the legal claim and the estimated damages. However, no adjustment has been made to the financial statements to recognize the probable loss. After discussing the above matters with the management of Sephora Limited, the managers decided not to adjust their financial statements. The audit senior then drafted the audit report. The following is an extract of the audit report. Basis for opinion and disclaimer of opinion. That is the first title there. We have performed our audit based on materiality level of 1,650,000. Our audit procedures have confirmed conclusively that trade receivables are materially misstated. The finance director, Philip Majuto, has refused to make an adjustment to write off a material trade receivable balance. Therefore, in our opinion, the financial statements of Sephora Limited are materially misstated, and we therefore express a disclaimer of opinion. Emphasis of matter paragraph. Sephora Limited is facing a legal claim for 65,000 shillings from a former employee. In our opinion, this amount should be recognized as a provision in the financial statements, of which this has not been done. We draw attention to this breach of international financial reporting standards required. Using the proposed audit report extract for the year ended 31st December 2023, evaluate 5 matters that are not correctly presented in the report. Part B. You are an audit manager. You are an audit manager in Kyoko and Koki Associates, a firm of certified public accountants with 5 offices and 14 partners. 70% of the clients of Koki and Kyoko Associates are audit clients, and 30% are clients that Koki and Kyoko provides with taxation services, accounting services, and business advisory services. The firm is exploring ways of expanding business to boost its revenue. The business development manager at Koki and Kyoko Associates has come up with following 2 proposals to increase brand visibility and attract new clients. 1. An advertisement can be placed in 2 national papers to attract new clients. The draft advertisement given to you reads, Koki and Kyoko Associates is the largest and the most professional accountancy and audit services provider in the country. We offer a wide range of services in addition to audit, which are guaranteed to improve your business efficiency and save on tax. If you are dissatisfied with your auditor, we can offer a second opinion on the report that has been issued. For all new clients, we have an introductory offer of 30% discount when both audit and other services are provided. Our rates are approved by the Institute of Certified Public Accountants of Kenya. Number two, a new experienced partner in the banking sector has joined Koki and Kyoko Associates. The business development manager has proposed that the partner should specialize in offering corporate finance services to clients. Specifically, the partner should advise the clients on how to raise finance through debt and would negotiate with the client's bank or finance provider on behalf of the client. The fee charged for this service will depend on the client's obtaining finance required. For each of the proposals given by the business development partner, advise the partners of Koki and Kyoko Associates on 5 potential ethical and professional issues that would arise. I think this one was quite easy, candidates. There are 2 proposals here. The business development manager at Koki and Kyoko Associates has come up with the following 2 proposals to increase brand visibility and attract new clients. So there are 2 proposals. One is placing an advert. This is a newspaper advert. Then the second proposal is in relation to a business development manager who could specialize in offering corporate finance services. So the question here is, for each of the proposals given, by the business development manager, advise the partners on 5 potential ethical and professional issues that could arise. And candidates, you can see there are 2 proposals. The question says for each of the proposal. That means that for each proposal, candidates were to give 5 issues that could arise. So you are required to give 5 issues that could arise in relation to the newspaper advertisement, and 5 issues that could arise due to the corporate finance services that are offered to the client. What do you think? What is your take? This is part B. Let me call it Roman 1. Newspaper advertisement. What are the 5 ethical and professional issues in advertising professional services in newspapers? George, talk to me. And your answers should relate to the case. We've read the case. All right? The company would want to improve brand visibility and attract new clients. So it has 2 proposals. So what is your take? Now, look at the information. For you to get answers, candidates, look at the information on the first proposal. We read that the draft advertisement given to you Who is you? You is the audit manager. We read you are an audit manager in Kyoko Limited. All right? You are an auditor in Kyoko and Koki Limited, a firm of certified with 5 offices and 14 partners. 70% of the clients are audit clients and 30 are clients that Koki provides with taxation, blah, 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 blah. The firm is exploring ways of expanding business to boost its revenue. The business development partner at Kyoko has come up with the following 2 proposals. So the 2 proposals have been generated by the business development manager or the marketing manager. They've been they've been generated by the marketing manager, and these proposals are submitted to you as an audit manager. So one proposal is to place advertisements in national newspapers, and the advertisement reads as follows: that Koki and Kyoko Limited is the largest and the most professional accountancy and audit services provider in the country. That is where the first answer is, candidates. They claim that Koki and Kyoko Associates is the largest and the most professional accountancy and audit services provider in the country. That is the first answer. Such a claim is misleading. It is a misleading claim. That is the first answer. Misleading claim. The marketer is claiming that this audit firm is the largest and the most professional service provider in the country. That is misleading, and that we have a problem with it. Okay, because the question is identify 5 potential ethical and professional issues. That is an issue. That is a problem. They claim that the audit firm is the largest. The advertisement claims that the audit firm is the largest and the most professional provider. Such a claim may be difficult candidates to substantiate. It is difficult to substantiate and can be considered as misleading because it's not easy to substantiate. Okay? R says lack of professionalism when the advert is to suggest they are the most professional. Yeah, that is true. That is true. Misleading. It is misleading. It's unprofessional. It is not easy to substantiate such a claim. All right? Then look at the second sentence in this advert. We offer a wide range of services in addition to audits which are guaranteed to improve your business efficiency and save on tax. Okay? Then we read, if you are dissatisfied with your auditor, we can offer a second opinion on the report that has been issued. This is an audit firm that is advertising in a newspaper stating that, and you see this advert is intended to reach potential clients who are audited by other auditors. So the audit firm is telling the potential clients that they issue second opinion if a company is not satisfied with the opinion of an auditor. Second opinion offer. second opinion offer candidates, that is also unprofessional. Second opinion offer. Second opinion offer is also inappropriate. Offering a second opinion, offering a second professional opinion, second opinion on an existing audit report raises concerns about independence and objectivity. A report that has already issued by another auditor coming in to state that they can issue a second opinion, that is not objective. All right? Why? Why, candidates? Because that would imply a willingness to undermine the work of other auditors. That means that this firm is willing to undermine the work of other auditors. Because what makes Kyoko and Koki associates more knowledgeable or more competent? What makes them more competent? When they belong to the same profession. What makes a firm more competent than the other? When the auditors went to the same school, they attend seminars together. So what makes this firm claim that they are the largest and most professional service provider? So that is not appropriate. It is unprofessional to state that you can offer second opinion to audit reports that already exist. It implies that such an audit firm is willing to undermine the work of other auditors. Of course, we know peer review is necessary, but not under these conditions. All right? Let's read on, candidates. The answers are within the case. The good thing with the advanced audit paper is that answers are just within the question. For this one, you see, we are just picking them from the question. Further, we read, the advert states that for all new clients, we have an introductory offer of 30% discount. All right? That again is another problem on the fee structure. The fee structure of this company is not professional. It goes against professional guidelines on fee structure. Because here they are telling us that they are offering a discounted fee structure for new clients. Okay? That's what the advert says. For all new clients, we have an introductory offer of 30% discount. Introductory offer of 30% discount. That is a discounted fee structure for new clients, which could be seen as a form of what we call lowballing. Lowballing. It is a form of lowballing, offering a lower fee compared to the market price. And that is unacceptable. It's unprofessional. Why? Because it might compromise the quality of the services provided. If a firm offers a lower price compared to what is offered in the market, that firm is most likely to take shortcuts. And in taking shortcuts, quality is compromised. That's why lowballing is not allowed. Okay? it could compromise the quality of services provided. Okay, you see the answer is just within the question. Then the third one, look at the next sentence. Look at the next sentence. Our rates are approved by Institute of Certified Public Accountants of Kenya. Our rates are done what? Are approved by the Institute of Certified Public Accountants of Kenya. Now, does ISPAC or any other professional body approve rates? Does it approve rates? Is that true? So the advert is mentioning that the rates are approved by ISPAC, and that could be misleading. So that is another problem. Can ISPAC, which discourages lowballing, because it is such professional bodies that discourage lowballing. If ISPAC is discouraging lowballing, can it at the same time approve fee structure or fees that is charged below the market price? That is not true. So that information on ISPAC is another point. ISPAC fee approval is misleading. Mentioning that the rates are approved by ISPAC could be misleading, because ISPAC typically does not approve specific fee rates, but rather it sets out guidelines for ethical fee arrangements. Okay, so that is a problem. You understand? So you are to give 5. How many points are these? Misleading claim, second, opinion offer, fee structure, lowballing, ISPAC fee approval. What do you think? Now look at the paragraph again. Look at the paragraph. This firm says that we offer a wide range of services in addition to audit, which are guaranteed to improve your efficiency on tax. If you are dissatisfied with the auditor, we can offer a second opinion on the report that has been issued. Now, candidates, this is what we call soliciting. Soliciting. This firm is directly soliciting clients by offering discounts, and that is unprofessional. That is going against the guidelines. Directly soliciting clients by offering discounts and even suggesting dissatisfaction with existing auditors could be seen as a violation of professional independence. So point number 5, let me write it here: soliciting clients. Soliciting clients directly is unprofessional. Soliciting clients directly by offering discounts is a violation of professional independence and integrity. All right? So that is it on that bit. That is it. Is there any other point? Is there any other point? If you are dissatisfied with your auditor, we can offer second opinion. For all new clients, we have an introductory 30% discount when both audit and other services are provided. Our services are approved. Our services are approved. Our services are approved. So let's move on. These are 5 points to the second proposal, which is on corporate finance services. Corporate finance services. Corporate finance. Corporate finance services. Here is the proposal. A new experienced partner in the banking sector has joined Koki and Kyoko Associates. The business development manager has proposed that the partner should specialize in offering corporate finance services to clients. Specifically, the partner should advise the clients on how to raise finance through debt and would negotiate with the client's bank or the finance provider on their behalf. The fees charged for this service will depend on the client obtaining finance. Will depend on the client doing what? Obtaining finance. So what do you think, candidates, is the first issue there? Felista says there will be a self-review threat. Self-review threat. Felista, is it really self-review threat? Self-review, Felista, means reviewing your own work. But here we are talking about advising clients. Self-review is reviewing your own work. It is like when the auditor does the accounting work of the company, then audits the same accounts that is prepared. That is reviewing his own work. But that is not the case here. Here we are talking about advising clients on raising finance and then negotiating with financial institutions on their behalf. What does that mean? Or what's the issue with doing that? Where is the threat? What is the threat? It's called conflict of interest. Conflict of interest. Conflict of interest. Conflict of interest. Correct. That could be conflict. It is conflict of interest. Advising clients on raising finance. You advise a client on raising finance. Then you go again and negotiate with the bank or the financial institutions on their behalf. That creates a potential conflict of interest. Because, candidates, the firm's loyalty might be divided between the client's interests and the interests of the financial institution. That is the one problem. Then we have also read that the fee charged for this service will depend on the client obtaining finance. What is the problem with charging fee dependent on the client obtaining finance? What is the issue with that? Charging fees contingent on obtaining financing. What is the problem with it? Is what we call contingent fees. Okay? Contingent fees. What is the problem with contingent fees? Right? Imagine you are the auditor, but you don't charge fees outright. You tell your client that you are going to pay me if the deal succeeds. What is the problem with that? It's like manifesto telling you you are going to pay fees for the tuition contingent on your passing the exams, right? That means the fees is hinged, or it depends on your passing the exam. Here we read that the fee charged for the services, these professional services, will depend on the client obtaining finance. So the auditor advises the client. The auditor then goes to the client to negotiate for the debt on behalf of the client. Then he is not paid for that service, but that service is paid for it only if the funds are advanced to the client. Charging fees contingent on obtaining finance could incentivize, incentivize the firm to prioritize securing a deal. Okay? Candidates, you understand? It could give the auditor the incentive to prioritize securing the deal, even if it is not the most suitable option for the client, because there are many sources of financing that a company may go for. But if the auditor knows that he will be paid if the company obtains debt finance, then the auditor will, that will be an incentive to the auditor to pursue that route of obtaining debt finance, even if there are other better alternatives to raising finances. That is the problem with contingent fees. Do you understand? Contingent fees. It's a problem. If the company is going to charge fees contingent on the outcome, then that is a problem. What do you think is the other issue, professional issue and ethical issue? What is in your view? If the auditor, because don't forget the root. The company wants to improve its, we read, the company wants to improve its visibility, brand visibility, and attract new clients. So one proposal is to offer corporate finance services. Corporate finance services, like advising clients on how to obtain debt, like negotiating loans on behalf of a client. So my question is, what do you think such route can have? Can such corporate finance services affect the independence of the auditor? What do you think? Providing corporate finance services is more likely to impair the audit firm's independence if it later performs audit or assurance services for the same client. The auditor may not be independent. Just the same way he may not be independent in preparing financial records for the business, because you see, he's like he's working for the company. By going to negotiate loans on behalf of the company, it's like the auditor is working for the company, which again is supposed to audit. He's supposed to give an opinion on the issues on which he's providing services, corporate finance services. So that is most likely to impair his independence. Independence may be impaired. All right? You understand? Independence will be impaired. He will not be independent. How can he be independent? he may not be independent at all. Then candidates' answers to such questions are just within the question. We are on the second proposal. We read, the business development manager has proposed that the partner should specialize in offering corporate finance services to clients. Specifically, the partner should advise the clients on how to raise debt and would negotiate with the banks or the finance provider on their behalf. Okay? A new experienced partner in the banking sector has joined Koki and Kyoko Associates. So this is a strategy. This is a plan. They are planning that they invite or hire a new experienced partner in the banking sector. So this is an audit firm that is like diversifying, offering services other than auditing. And for the audit firm to do that, they have to hire an experienced partner in the banking sector, because the firm wants to specialize in offering corporate finance services. Do you understand? You have to understand that. So the question is this new partner competent? Because we've read that the new partner's expertise in the banking sector is what the audit firm is banking on to offer the corporate finance services. So there is the aspect of competence. And what do I mean by competence? Now, the new partner's expertise, let me put it that way. The new partner's expertise in the banking sector might not necessarily translate into expertise in all aspects of corporate finance, because the company wants to offer services in corporate finance services. But here they are hiring an experienced person in the banking sector. One who has experience in the banking sector does not necessarily have experience in the corporate finance sector, because corporate finance sector is wider. It's wider than the banking industry. This one has experience in the banking industry. So this new partner's expertise might not necessarily translate into expertise in all aspects of corporate finance. So the firm needs to ensure that the partner has the necessary competence to provide comprehensive advice, because corporate finance supersedes banking services. So that is an issue. Competence. Right? Then, of course, candidates, there will be an issue on disclosure. There will be at some point be need to disclose. R says it will be difficult for the audit firm to provide an impartial audit opinion for the same client's advice for these other services. That is true. R, you explained in detail on the issue of objectivity and independence. What you have explained is independence and objectivity. The audit firm might not be partial or independent or objective. The company may most likely be biased, so there is lack of objectivity. That is true. But there is also the other aspect on disclosure. The firm needs to disclose the nature of its relationship with the financial institutions to the client. There is the aspect, candidates, of disclosure. Now, this is what I mean. There is the auditor on one hand. We have financial institutions like banks on the other hand. Then there is this company that the auditor audits, the auditee company. It's called auditee company. Let me call it auditee company. So this auditor is an auditor to this company. All right? Is an auditor of this company. Call it company B. So auditor A audits company B. But this auditor here, who is auditing company B, offers corporate finance services to the same company. All right? Then this same auditor negotiates on behalf of this company that he audits. Because that's what we read. He advises clients on raising finance and then negotiates with the financial institutions on their behalf. So he negotiates loans for this company, then on behalf of this company to these financial institutions. So that's why there is the aspect of disclosure. This auditor has to disclose his relationship with these financial institutions. It needs to, the audit firm needs to disclose the nature of its relationship with financial institutions to the client. All right? And that includes any potential conflicts of interest or even any financial incentives that might influence the advice given. All right? So there is the aspect of disclosure because the auditor is advising this company, is also appearing as a negotiator for loans or financial services from the financial institutions. So that's all, candidates, for our today's lesson. It was our first question in April 2024. We will answer question 2. I urge you to go through the questions. Thank you. Bye-bye.